Welcome back, everybody. Now, there's a lot going on in markets right now with stocks seemingly still going more down than up, Nvidia being right in the middle of their GTC conference, and the Fed deciding to keep rates steady. But forget about all that. Let's actually talk about what stocks I think look attractive right now and dig into some real analysis on an actual company. And now, I'll just start this off by saying that the stocks that I think look the most attractive right now from my own portfolio are as follows: Amazon, Meta, Nvidia, Taiwan Semiconductor, and Google. And none of those should really be a surprise because, of course, I've talked about these companies a lot on this channel, so I'm not going to go into the details of why again because none of that's really changed. It's really just the price that's changed, and it goes back to what we talked about last week. Like, these market downturns are great opportunities to add more to those companies that are already in your portfolio that you feel really strongly about, because we don't always have to be looking for new stocks. I mean, we should take advantage of the work that we've already done and just add to those existing holdings that you really like that just happen to be trading on sale. But that being said, there is one company that I don't have in my portfolio that I've been watching for a while that I actually wanted to dig into today. I added this company to my watch list way back in August of last year when it was $56 a share. Then I watched it almost triple in price before it came back down over the past month. And the stock that I'm talking about is Twilio. Now, to be clear, I don't have Twilio in my portfolio right now, but it is a stock that I'm watching, especially as the market continues to sell off. And it's one of those things where I thought it'd be fun to just take a look at the business, look at the fundamentals, and get an idea of what we think about it. So let's go ahead and get started. And we're just going to go through my little presentation slide deck here that I create for each of these companies when I dig into them. And let's just go ahead and start with the business. Now, I wrote some stuff here, but Twilio is basically a leading cloud communications platform as a service provider, CPaaS. And that's something that, I don't know if that the acronym is really all that important, but it's this idea of communication platform as a service, right? What does that mean? It means whenever you have an application that actually sends you a text message, sends you an email, sends you those type of things where it's communication between a company, a business, and you, the consumer, those are the type of things that Twilio provides. And specifically what Twilio did is they kind of innovated this space by providing APIs that other businesses could use to be able to accomplish these kind of digital communication things. And so in terms of who their customer is, it's basically customers of all sizes and all industries. I think they have over 290,000 customers altogether. In terms of total addressable market, I think even they say that added up, it's about 80 billion, maybe a little bit over 80 billion. So stuff like messaging and voice, customer data, which is more like engagement, not necessarily just data like Snowflake or anything, but like customer engagement platforms, I think that's the other 20. And then contact center as a service is an additional 20 billion. And in terms of how Twilio is different, I mean, they did kind of pioneer this space, but also they're cloud agnostic, meaning you don't have to be on one of the cloud providers to use their service. They're developer focused, and that developer ecosystem is a big part of kind of what their moat is today. And then they're expanding more into customer engagement platforms, which we're going to talk about here in more detail. All right, so let's take a look at their overall growth slide. Now, there's a couple things to notice here. So number one, if you just look at the revenue growth year over year, it's just over 7%. And right off the bat, you're like, ew, like, why are we looking at this stock? It doesn't even have double-digit revenue growth, and yet it's kind of more of a tech name that's not going to have the best fundamentals necessarily, but there's a little bit more to the story than that. Now, obviously, when you look at their 5-year revenue growth, it's 39%, which is really good, and you can kind of see that on this chart. Right? Like, it was growing pretty rapidly and then has kind of tailed off a little bit to where, yeah, it's still growing, but not nearly at the same rate. And then if we look at free cash flow per share, it's actually a pretty respectable 18% and has been pretty good over the 5 years. But I think the main thing to take away from this slide, other than revenue growth is a question mark, is that look at the profitability numbers continuing to get better over the last 2 years. And it's one of those situations where last quarter their operating income was actually positive for the first time. And so it's that story of you have a high growth tech company that matures and hopefully the fundamentals improve and they become profitable. And they're kind of at that stage right now where they just became profitable, but you also have the revenue growth issue where it seems like it's slowing, and that's kind of what we're going to talk about. Now, if we just break down their business segments, there's not too much interesting here other than communications is basically their main core business. That's where all the transactional stuff about pushing out emails, voice messages, text messages, all that is within communications, which is obviously the bulk of their total revenue. And it grew at about 12% year over year. And the other segment, which ironically is called Segment, is a very small piece of their revenue, and it was actually negative growth year over year, which is one of those things that's a little bit of a concern, because what this business segment is that customer engagement platform stuff that they're trying to expand into. And it's one of those things where, they're known as like a transactional API provider for communication, but that's a relatively low margin business, right? Because you're paying messaging rates and those things kind of add up. So it's not just a core software as a service type of business. It has some nuances to it that make it a little bit more complicated. And their expansion into this additional revenue segment is ideally a way to one, expand their moat and their overall usefulness to businesses, but also expand their overall margins over time. And then if we take a look at their geographic breakdown, you can see that about 2/3 of their revenue is US compared to international, but the US portion only grew at 5% year over year, whereas international was around 11.7%. So the first thing you might be asking is, well, what interests me about Twilio? And at the end of the day, it's one of those things where you have a software as a service provider, or in this case, what do they call it? Communications platform as a service. And it's one of those things where pretty much every company needs that type of functionality, right? And when I put it on my watch list back in August, my main concern at the time was, well, they're not really growing all that fast. And I questioned how big of a moat they could actually have. Like, what is their real tangible market advantage, especially when you're going up against the Amazons, Microsofts, or even Googles of the world who have some kind of messaging capability already built in to their cloud platforms. And that brings me to the competitor slide, right? So in terms of their competitors, you have companies like Vonage and Bandwidth and even Cinch, which are kind of more telecom communication-based companies that also now provide APIs. And then, of course, you have the cloud service providers like Microsoft and Amazon, and I didn't add Google here, but they're in there as well, who offer these kind of communication APIs through their cloud service platforms. And so part of what makes this a little bit interesting is, okay, you have the cloud service providers who they provide this capability, or at least part of it. The challenge is you have to be using their cloud, right? It's similar to what we talked about with Snowflake. And so that's one barrier to entry depending on your company or what your company needs are. But then you also have this other kind of nuance around communications and telecom stuff where there's like regional providers who may have an advantage in a certain part of the world, a certain part of the country, and that adds another kind of layer to the challenges that you have to face in this space. And so on one hand, you take a look at this competitor list and you can say, okay, there's some real competition here, especially the ones that are more telecom based and they may have advantages in certain parts of the world. And then, of course, anytime you're going up against Microsoft, Amazon, or Google and your software company, then that's always one of those things that you have to be aware of. But let's go ahead and talk through this a little bit in terms of top risks and opportunities for Twilio. Now, in terms of top risk for me, I actually put commoditization of software. And this is going to be an interesting one that we talk about multiple times here, because when I originally put this as my top risk, I hadn't thought through all the different ways that this could actually present itself. And it's going to get a little bit interesting because it's one of those things where I do absolutely think it's a risk, right? As things like AI and being able to code with AI become more of a thing, it means that software development just in general is going to explode, right? So what does that mean? Well, it means that if you're a software provider, that is likely going to get commoditized at least a little bit. Like the price of software, the margin you can charge for software should go down because it's easier to create software. Now, I'm oversimplifying it by a lot, but that is one aspect to it. But there's a little twist to it that I hadn't thought about originally that we'll get to at the end. Now, margin pressures as it relates to messaging, I think is going to continue to be an issue. And that's one of those things where anytime you're dealing with a more kind of like older technology, older legacy architecture like messaging, right? You're going to have to kind of deal with the gatekeepers of that technology. And that's, where the telecoms come in. And the prices there are something that obviously Twilio is going to just have to deal with. But that's really one of the big things that puts pressure on their margins. And then lastly, which we already touched on, is strong competition. Now, in terms of top opportunities, and this is where we haven't really talked a lot, but developer ecosystem. So Twilio, one of the ways that they actually became the market leader in this space is they were really the pioneer at creating this kind of API developer ecosystem to be able to do this type of functionality, right? So every single startup that came up that was like, hey, I need to do, messaging and I need to get information out to my customers. Well, here's a service that just allows me to connect to an API and I automatically get all that infrastructure and I don't have to build it myself. And it's a pretty basic concept to think about in 2025, but that's where Twilio really made their mark. And even today, they're still the provider that really focuses on that developer ecosystem, and it's been a big plus for them. Now, in addition to their transactional communication APIs, they're expanding into customer engagement platforms. So this is stuff around knowing who your customer is, analytics around your customer, being able to segment your customer, which is why it's called Segment, but also things related to the contact center where they're trying to get in front of that whole modernization effort that's basically happening in every contact center in the world. And then lastly, in terms of top opportunities, obviously they already have a lot of enterprise customers, but the more that they can win in this enterprise space, it obviously helps with a little bit more predictability of revenue and additional increase in revenue overall. All right, now in terms of questions to think about from a business perspective, my number one thing is, can Twilio transition to more than just being a transactional software provider with their customer engagement platforms and get to higher margins? And I think this is going to be the big question for them, right? Like there's no doubt that they're kind of the market leader in this space now, but can they expand themselves to where they get some higher margins, they get a little bit wider moat, and they really make themselves more than just a transactional service provider? And then next is being cloud agnostic and having high developer usage enough to compete against the hyperscalers. So again, the cloud service providers are really tough competition. They're going to integrate all those things into their suite of products so it's easy for developers to use them. And it's really about how many companies want to be tied to just one provider or not. And when it comes to something like data, that was the argument I made for Snowflake, where I said, I don't think companies want their data to be tied to their cloud provider all the time. But what about transactional communication APIs? Well, that may be a little bit different. And then lastly, will the commoditization of software make the growth of this business and the overall industry stall? And this is a question, obviously, that we're not going to know until we kind of know and see it happen. But I think the commoditization of software is one of those trends that is going to come up with basically every SaaS company at some point in time here in the future. All right, so let's take a look at some operational stuff. Now, in their most recent quarter, their revenue came in at $1.19 billion, which was above their guidance, and operating income at $197 million, which again beat their guidance. And if you look at their guidance for next quarter, their revenue they expect to be about $1.13 to $1.14, with operating income between $180 and $190. Now, historically, they have beat their guidance basically every quarter for the last, 9 or 10. And anytime I see this, it means a couple of things to me. One, okay, great. Whatever they say, you can probably expect them to beat, at least, according to recent history. But it also probably means that they're a little conservative with their guidance because they want to, beat it every time. And, is that good or bad? I don't know that it really matters. It's just one of those things to be aware of as you hear guidance and you're trying to project what that means for the future. All right, now if we look at their capital allocation slide, their ROIC is negative, and that's something that we'll talk about here in a minute. Shareholder yield is a whopping 15.3% because they've been doing just an insane amount of buybacks. But the reason for that is that their stock-based compensation has historically been very high, especially as it relates to cash from operations. I mean, it basically has been more than their cash from operations up until this past year. But that is one thing that they are actively working on. And if we look at it on the quarterly basis, what you see is they actually have been improving it with buybacks. So it's one of those things where when you look at their stock-based compensation from a year ago, it's actually down. And if you look at that back here over the last 3 or 4 quarters, it's actually down year over year in each of those quarters. So it's definitely trending in the right direction. And it's something that they've already called out to basically say, look, we're concentrated on this. We're trying to make this better. And they want to get it down to be about 10% of total revenue. And you can see here in terms of buybacks, they did $2.3 billion in buybacks over the trailing 12 months, which is why you get a 15.2% buyback yield. Their share trend is down 16% year over year, which again is amazing. And they have about $2 billion of buybacks left. So that's going to be something that they continue doing. Now, in terms of debt, they basically have zero net debt where their cash on hand is more than their debt. So that's good. Debt to equity, net debt to EBITDA, obviously all good if they have zero net debt. Now, in terms of their ROIC, now this is something where I know every time I show these companies with a negative ROIC, people always cringe and I get it in the comments and all that. But the thing about Twilio, again, is what I talked about earlier. Even though it's negative 1.5, it's been trending in the right direction, right? It's one of those things where it's been improving improving over the last couple of years, and especially over the past 4 quarters or so. So when you look at this, obviously everything isn't where you want it to be, but it's trending in the right direction. And it's one of those things where if you're looking for a company that's maybe earlier on in its business life cycle, but still has fundamentals that are trending in the right direction and starting to look really positive, then it may be a good candidate for that. And if we take a look at their profitability, you can see that their gross profit margin is about 51%, which actually isn't all that bad. And their net profit margin, though, is at negative 2.45%. You might say, hey, they're not profitable yet. Now, remember, this is trailing 12 months and not the last quarter. But again, look at the 5-year average being negative 26.95. And you can see that that is absolutely trending to profitability and trending in the right direction. In terms of free cash flow margin, it's about 16.65, which again is better than their 5-year average. And you can just see it here on the chart where over the past 2 years or maybe a year and a half, these things are all trending in the right direction and going up, which is what you want to see, especially from a tech company that's hopefully maturing a little bit and getting to profitability. All right, and we take a look at the valuation. Now, this price to cash flow percent difference doesn't really mean much because it's one of those situations where when their price to cash flow was like astronomically high when they were just starting out or just a few years ago, then this doesn't really become meaningful anymore. But these next two, in my opinion, are meaningful. Price to cash flow to growth trailing 12 months is at 0.29 and even projected is at 0.47. And usually anytime that's under 1, it's good. And if it's under 0.5, in my opinion, it's really good because what it means is that it's trading at a multiple that's about half of what their projected growth rate is going to be. And that's a good thing. And then if we just take a look at their price to cash flow chart. Now, I've only done this for the last year. And this is one of those situations where if I expand it outside of more than a year, it has those really wide swings to where you can't really see anything on the chart. So again, it's one of those special cases where you have to use your own judgment as to what makes the most sense and what you're going to compare against. But as we can see is, back in August, it was actually trading at a better multiple when I initially added it to my watch list. But, I think the business fundamentals have improved quite a bit since August because if we went back to August, basically what you saw was the revenue growth had slowed and it hadn't picked back up again. And you had a company that even though they were trading for a lower multiple, their outlook, in my opinion, just wasn't quite as good. Whereas now, if you just look at their basic revenue growth trend for the past 4 quarters, you can see after Q2, it was in the single digits for the first 2 quarters of the year. And then it's been accelerating through Q3 and Q4 to where it was 10 and then now 11%. And just one thing I want to call out here, this price to cash flow to growth rating, one thing that people will say is, well, yeah, you're only using operational cash flow. You're not accounting for stock-based compensation. And that's true. This number is not accounting for stock-based compensation. And again, that's a judgment call that you'll have to make in terms of how you like to analyze valuation and look at these companies. To me, I'm still looking at operational cash flow in general, knowing that they're working on stock-based comp and understanding that it is a youngish tech company. And that's kind of what you see and what you get with those type of companies. All right. So now if we go to my 3-tier rating for Twilio, in terms of the business, they are the CPaaS pioneer and leader. They have their developer ecosystem, which is great. And they are expanding into customer engagement platforms. However, revenue growth has been slowing a little bit. And it's one of those things where the commoditization of software is a little bit of an unknown. And so I'm going to rate their business as just okay, even though I was kind of on the borderline here. I wasn't sure if I wanted to rate it as good. But as of right now, I would rate it as okay. In terms of operations, they do have 0 net debt. They have good but not great margins, mainly because of the messaging costs that they have to incur. But they have been improving profitability and ROIC, and is trending in the right direction. Still, all those things together, I would put their operations as just okay. Now, in terms of valuation, here's where people are probably going to scoff a little bit. But look, price to cash flow to growth is less than 0.5. Projected price to cash flow is less than 18. To me, for a tech company that has a future, if you believe that the revenue growth is going to come back and remain double digits, then I think the valuation is good. And so I rated it as good. Now, if we just go back here to the general overview, what's the story? CPaaS pioneer and market leader, developer first approach, ecosystem switching costs. The more, 290,000 customers. That's a lot of people using your APIs. Cloud agnostic is obviously an advantage, and expansion to customer engagement platforms is a key part of their future strategy. Now, Improving profitability and efficiency is one of those stories where it looks really good right now. We just have to see that trend continue. But they have strong competition from obviously regional telecom players and global telecom players, but then also the cloud service providers like Microsoft, Amazon, and Google. And then lastly, messaging margins and commoditization of software. But wait, and this is what I wanted to get to here. What I started thinking about in terms of the commoditization of software, it comes basically with two parts to this that impact Twilio. Number one, it means that any SaaS provider is going to be under pressure because there can be, infinite number of competitors now who can ramp up much quicker, much faster with less manpower and at least be able to get to a portion of the features that they provide. So in general, I would view that as a negative for Twilio and most SaaS companies. However, if we go back and take a look at some companies that I've recently added to my portfolio like Cloudflare and Snowflake, well, they're also SaaS companies, but I wasn't worried about it for them. And to me, it's because they had kind of a unique thing about them that I thought was different. So with Cloudflare, it was because they have their edge network, and they're the market-leading CDN. So they had aspects of their business, of their infrastructure that were going to be very hard to replicate. And with Snowflake, it's basically because they're holding your data. It's one of those things where you don't just change your data provider overnight because it takes time and effort to get it to where it's going, to train all your people to use it. And that's not something that can just be easily migrated. So in this case with Twilio, what's interesting is that them actually being a provider of these digital communication services, working with the telecoms and all that all across the world, and being able to do that on a global level actually is kind of unique in the sense that, sure, there's going to be a bunch of new software that just happens to pop up because it's commoditized now, but I'll bet you that most of those people don't want to deal with messaging and all these other things that are lower margin and kind of harder to implement. So to me, that's one of those things where, yes, it is going to put pressure on them. It may put pressure on pricing for them, but it's kind of a double-edged sword because on the other hand, there's going to be a ton more software companies that get created that need to use messaging, right? So it could be one of those things where yes, it probably puts pressure on their business model, puts pressure on their pricing, but it may actually increase their overall volume and overall customers just because software is easier to create, which means software companies are easier to create, and they're all going to want to communicate to their customers. So it will be interesting to see if this becomes a net negative or positive for Twilio, but I do think it's important to kind of look at it at that slightly different angle. All right, so in terms of what I'll be monitoring for them, obviously revenue growth. I mean, right now their revenue growth technically is in the single digits. They guided for single digits for 2025. I think 8% was what they guided for. So I want to see what happens there, right? And I also want to see communications versus segment growth trends, right? Like, is this element of customer engagement platforms actually growing? Right now it's negative year over year. Then obviously their GAAP profitability trend is one of those things that I want to see continue, and stock-based compensation versus operating cash flow. They've already been working on it. It's already kind of been successfully getting better, and hopefully that continues. And then lastly, how does this fit against my criteria or my overall strategy? Obviously the secular trends piece, digital communications, APIs, contact center modernization. There's a bunch of stuff I could have put in here, but those are definitely all good secular trends. Software commoditization, I put this as a yellow just because, again, there's going to be aspects of it that are negative to their business. There might be aspects of it that are positive, and we'll just have to see. In terms of market advantages, they are the market leader in CPaaS, and their developer ecosystem has obviously switching costs, so they have some strengths there. In terms of increasing cash flows, answer is obviously yes. And in terms of efficient capital allocation, they're at negative 1.5, so the answer is no, but it is improving. So we just go back real quick to my 3-tier rating. In terms of my overall thoughts on Twilio, I think it's an interesting company. And I started looking at it back when I was looking for a more kind of smaller market cap tech company to buy into. At the time, I ended up buying Cloudflare and I didn't buy Twilio. But, it's one of those companies where it's a good story of, okay, we're getting back to profitability. We're getting back to some better fundamentals. And you can see that they're turning a corner. I mean, they were just profitable this past quarter for the first time. And if that trend continues, it's going to be be a good thing. The challenge for them will be, is revenue growth going to come back, right? Because at the end of the day, people can justify a high multiple when the growth is there. When the growth isn't there, especially if you're in the software space, then that gets a little bit scary. So, this is a company that I don't own today. Obviously, it is on my watch list. It has been. I actually do think it's trading at a pretty attractive price right now. So it's one of those things where I just happen to have a bunch of other stuff in my portfolio that looks attractive too. So I'll probably focus on those because I know them better. I think the business outlook is more predictable for them. But I wouldn't be surprised if I ended up taking a flyer on Twilio just because I've watched it for quite a while. And I think they're an interesting company. I actually think that there won't be that many software companies that are like, oh, I want to go deal with telecoms, right? It's more of a headache than probably it's worth for a lot of them. And that actually may be something that helps Twilio kind of stay the course. And being cloud agnostic and all that, developer ecosystem and all that's great. But we'll see what happens in terms of their expansion to the customer engagement platforms. And if that really starts to take off, then I think this is a really interesting company. But overall, just looking at this, normally the stocks that I buy always have a good rating in the business side because it's the part of the evaluation that I really put the most weight on. And here, even though I thought it was close, I would probably just rate them as okay, probably until we start to see some growth in this customer engagement area. But for now, I think okay is the right rating. So what do you guys think about Twilio? Let me know down in the comments below. Now, if you want to see the changes that I made recently to my portfolio as the market started to sell off, you can watch that by clicking this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.